Very good morning to our chief guest and the key resource person of the day, respected Mr. K.Annamalai, sir. And today, the auspicious day, 12th January, Swami Vivekananda Jayanti and the National Youth Day. And we have the eminent person who has the values with him all the time and he has got through. And he was part of those mission activities for a long time. He's with us. The best resources that a nation can have to grow is youth. National Youth Day reminds us that we must always value the young energy of the country because they will make the future. We wish all of you a happy National Youth Day. As Swamiji says, strength is life. Believe in ourselves. That's all about, we can put forward the youth up. Today, with that auspicious note and auspicious occasion, and we have an eminent person with us, the most respected person in this region, in our region, Mr. K.Annamalai, sir. We welcome on behalf of our chairman, Sugumaran sir, a trustee, and all the dignitaries of management, as well as the faculty members and students. We welcome you, sir, for this occasion.
Thank you. Thank you. Thank you, sir.
So also, we welcome the dignitaries from Annamalai Capitals Private Limited for organizing this wonderful occasion for Adithya School of Business Management. With that welcome address, I would like to give a small note of our speaker today. The respected key resource person of today, Mr. K.Annamalai, sir, has established and is a managing director of Annamalai Capital Services Private Limited, established a skill-based financial training center, ACS Capital Market Academy, associated with National Stock Exchange and Bombay Stock Exchange to provide on-hand training and practical-oriented application of knowledge driven in financial market areas, segments. He is also an investment consultant and stockbroker since 1990. His education background starts with an economics and cooperation graduate in Kandigram University, postgraduate in economics, cooperation and sociology from Sri Ramakrishna Mission Vidyalaya, and postgraduate diploma in personnel management, bachelor's in general law, postgraduate diploma in commodity trading. At present, he is also a doctoral research scholar in the area of financial derivatives. So having all this academic background, he started his career in the year of 1978 as account assistant for a private company, engineering company in Coimbatore. And after that, he has joined a multinational company as an executive towards human resource development and administration. After that, in early 90s, 1991, our resource person has commenced own consultancy firm, become an entrepreneur, become a stockbroker and investment consultant. Founder member of Coimbatore Stock Exchange Limited, also served as treasurer, vice president, president of Coimbatore Stock Exchange Limited for a long time. And he was also promoter of Annamalai Capital Services Private Limited and sub-broker to JM Financial Services Limited for equity, commodity, and currency tradings. Distributor for mutual funds, designated partner for ACS Capital Market LLP, managing trustee of ANUSHAA KESAVAN Charitable Trust, and served as resource person and board of studies member for many multiple universities and B schools around this region. Like also have MOUs, and we would like to have soon a memorandum of understanding for our Adithya School of Business Management with Annamalai Capital and Academy for our students' benefit and skill enhancements. Shortly, we were talking to the dignitaries. Soon we will be establishing one. After this pandemic, we will invite our resource person to join, and we will have the signing soon. So with that small note,
sir,
I would like to welcome our resource person, most respected Honorable Mr. Annamalai sir, for this occasion. Sir, welcome you, sir. And with that note, I would like to hand over the session to you, and it's over to you, sir, now.
Thank you, Dr. Sandrapandian, and really very lengthy. Sorry, and I should deserve for that, and I
You
should.
deserve it, sir. You deserve it, sir. Actually, more than that, sir. Actually, yeah.
Thank you so much.
Thank you.
Friends, I really feel happy to be with you in this happy morning. I was asking him how about the climate in your campus. He said very fine and cool. And this kind of climate, normally our body feel fresh, and the morning we can able to understand things better. And I expect being a postgraduate student, I normally expect there is a more interactions, because especially the lecture ends up at the graduation level. When you move towards the post graduation, and again research, and it will be more of interactions rather than the one side lecture, so that there will be a better exchange of views, and the better knowledge will come out. I hope that most of you read newspaper. Anyone can just unmute your mic and tell me that do you have the habits of reading newspaper? Anyone? Have you read anyone today that the Hindu or the financial magazine, where the RBI governor has given a report? And anyone? Students, not from the faculty side. Students, anyone can tell me, have you read any newspaper or top headlines of financial today? No one? Just at least unmute your mic, say yes or no. Someone.
No, sir, I haven't read today.
Please. See, this is the most important. I tell you that always, what you read from the books and the classroom may help you to get your knowledge maybe around 30 to 40%. 60 to 70% of the knowledge, it will come from your updating what is happening in the economy. That is more important, because when doctor has made an introduction that the knowledge is different from the skill. What we want that during your MBA in this excellent campus, that we want to upgrade your skill rather than the knowledge. I hope that most of you understand the difference between a knowledge and the skill. The skill only help you to perform better, even though you have a more knowledge. Today, because it is more relevant to our topic today, that stretched valuation threaten the stability. This is the headlines today by Reserve Bank of India governor. And he also made that, Mr. Das made that disconnect between markets and the real economy pose risk to the financial systems. I hope that I do not know how many of you understand the reality of the disconnect between the markets and the real economy. That is what the subject today, financial crisis. The financial crisis, how it comes, and the crisis, any crisis for that sense. I hope that the word crisis, every one of you understand, because in your day-to-day life, every one of us face crisis. Each crisis have got a impact. Each crisis teaches a lesson how to live, especially students of management. Today, the topic we are going to discuss on the financial crisis. The more relevant of the news today has come into news that yesterday the Reserve Bank of India governor told that there is a disconnect between the markets and the real economy. That is that means that the crises are brewing. We need to understand. So what do you mean by the market? Financial market. I do not know how many of you have studied the financial markets. Have you covered this subject, financial markets? The markets always should reflect the real economy. In simple way, I tell you that, I'll take every one of us. We each one have got a living standard, lifestyle. If our living standard does not match with the real income what generate, what will happen? Please, it is the simplest way to understand that every one of us should maintain our life standard based on our real income, what Me means the family or myself or the individual or the total family together, what the income we earn. If you maintain your lifestyle accordingly, the boat will go smoothly. You can run your family smoothly. If you try to have an exaggerated lifestyle, more than what you earn, if your spending is more, then one day or other you will land up in trouble. Simplest way. This is applicable to our family or on individual. The same is applied to the nation also. So you get my point, friend. Now let us understand what is the financial crisis. What I mean that any financial crisis means the asset price see a steep decline in value. Businesses and consumers are unable to pay their debt and financial institution experience a liquidity shortage. This simplest way tell you that means that, what do you mean by that? Steep decline in value. That means the purchasing power of the currency drastically comes down due to various reasons. We will find out what are the reasons for that. In that case, what will happen? No one will be able to pay their debts. The recent example is that the best example most of you would have undergone from March 20, and that's March 19 and that April 20 onwards, that due to COVID, we were all under lockdown. During the lockdown, what happened? The income became zero. The consumption become more. No income. Probably if you have a savings, that savings may help you to do the consumptions, or it may increase your borrowings. If there is a more borrowings, more consumption, lesser income, what will happen? You may not be able to pay back your debt. If you are unable to pay back your debt to the lender, the lending institutions or the individual may face a liquidity shortage. What do you mean by liquidity shortage? Liquidity means you do not have money or a cash or a bank balance in your hand to repay your debt. You get my point, friends? So there is a liquidity shortage because there is a two-way the difference of going up. One is that there is a decline in the income. The another way there is a more expenditure. And then you do not have a surplus to repay your debt. That is the exactly of a financial crisis. It applies to the family, it applies to every individual, it applies to a corporate, it applies to the whole country also. You get my point, friends? So the financial crisis is often associated with a panic or a bank run, during which the investor sell off assets or withdraw the money from savings account because they fear that the value of those assets will drop if they remain in the financial institutions. You get points, friends? I am trying to make as simple as possible. I am not using any bombastic words because most of you are in the first year semester, would have come from a graduation. Most of you, as I understand, that are commerce graduates, and some of them may be from the science, some of them may be from engineering. So it's simplest way, when the asset prices fall, that means that people try to sell off their assets before it fall further. So that will chain reaction. What will happen? When I try to sell my asset, when somebody tried to sell their asset, if more people started selling their head, this means that ultimately the law of economics works. What is the law of economics? It's a supply and demand factor. For any price, any asset, the value depends on the supply and demand factor. If more assets are coming on the selling side, the price will fall further. Again, that will lead to a complication because you know that there is a more withdrawal of money from the system, and more withdrawal, value goes down. So that will create an entire cycle, become a problematic. You understand, friends? So this is normally, that it will happen on the two way. That is, either it should be run from the bank side or from the investor side. That means that not only real estate market and from the stock market, the market means investors sell off any of the financial assets or anything. That is how it happens. Yes, which one? I think somebody doing something on the screen. Okay. Anyway, please. So the financial crisis, the other situation, I told you there are two situations. One is the bank run financial crisis. Another one is the investor-based financial crisis. The situation may be labeled include busting of a speculative financial bubble, that is a stock market crash, or a sovereign default, or a currency crisis. What do you mean by that? The financial bubble means bubble. I hope most of you understand. It's short-lived. Bubble cannot last long for a longer. It will burst, because that is the reason it's called a bubble. In the water bubble, in the seashore, you would have seen bubbles. So the bubble means it's a short term. The bubble may burst in a stock market crash. When the stock market crash, we will see the situations in the coming slides that how the stock market have done. And same way, sovereign default. What do you mean by sovereign default? Sovereign is nothing but a government. See, government cannot default in their payment. If a government itself is a default in payment, that means you are in a economic deep crisis in a chose. The another way is the currency crisis. We are the coming slide, we will discuss that what is the currency crisis, how it is impacted on the country's economy. So the financial crisis may be limited to banks or spread throughout a single economy, the economy of region or economies of the worldwide. Today, especially after WTO, entire world have been integrated by trade. Now there is a spread between one country to another. You are no longer protected. Probably in the earlier 80s, the Indian economy was a protected economy because we were not much impacted by the events happening in the outside the world. You get my points. Today we have been integrated by trade and so many businesses. So wherever it happens, it is having impact on every economy. So the bubble may start from stock market or from a sovereign default or by way of currency. What do you mean by currency? It's a more you need to understand. See, currency is in India, for example, we follow the rupee. And again, we need to have the international business where the currency need to be exchanged between the countries. Normally, you know, the worldwide, the business are done based on US dollar. It become accepted common currency for the international trade. Your currency needs to be valued against an international currency, that is a US dollar or UK pound or a German mark or anything Australian dollar. If our economy does not do well, if you do not have a growth, if you have higher inflation, in that case, you know, our rupee value will come down in the international market. When the value of our currency comes down, that means indirectly the other currency value goes up. So the exchange of currency between Indian and other foreign currency also create a crisis if there is an internal financial crisis. So these are all a nature of financial crisis which we need to understand. So what is the cause of this financial crisis? How it impact? See, the financial crisis may have a multiple causes. That is, generally, a crisis can occur if an institution or assets are overvalued and can be exacerbated by irrational or herd-like investor behavior. This is what exactly today the RBI governor stated, friends. You understand that the market behaves irrelevant to the real economy. You get my point. That means that the assets are overvalued. Today, even Indian stock market, last 2 months, if you have been looking at the index, I hope that most of you watch the stock market. If not, please start from today onwards, try to watch your stock market, that you know how the index is moving, how the index is behaved. And so that, you know, you need to know how the impact on the market. So that means that your stock market overvalues the stock prices, irrelevant to the companies are making profit or not. That means that you are overvaluing the property. In that case, how long that will sustain. The market cannot work based on unusual market value. Okay, that means that the asset, sorry, there was some disturbance because somebody have done some round, or we try to remove that. Okay, no problem. We'll carry on. See that the assets are overvalued, then it's a real value. That means that it's a ballooning. The value have been ballooning. In the case, that cannot sustain for a longer time, then it should be, that is what today the RBI governor also stated, that the real economy is not growing, whereas the stock prices are going up. It cannot disconnect between, all have to get connected. If you disconnect from the reality, then you live in a dream world that may lead to a crisis. So what will happen? One stage, a rapid string of sell-off can result in lower asset prices, prompting individuals to dump assets or make huge savings withdrawal when the bank failure is rumored. And I hope that probably you would have watched the recent happening in the Lakshmi Vilas Bank. Because if you're not read, please do your homework. Probably I tell the faculty that you should do some kind of research activities and project report on the failure and crisis faced by Lakshmi Vilas Bank or an Yes Bank. I will explain in the coming slides that huge withdrawals of savings from the bank will lead to again the failure of the bank. So friends, as such, the financial crisis means, it's a bubble, overvalue the assets, which will lead for havoc and selling of the assets, and which will bring down the value of an asset, which will create a liquidity crisis, which will again fall for withdrawal of money from the system, all leads to a banking crisis. How things have worked out, I will just explain the example, because see, I go with more on practical rather than the subject oriented. Probably this subject you can read from the books, but I give you practical example to understand the financial crisis, how it has impacted the economy, and what is the lesson we need to learn. So there is a banking panic where at the genesis number, the financial crisis of 19th, 20th and 21st century, many of which led to recession and depression. You understand, friends? Now I am using a lot of words relevant to economics. You need to note down, understand the real meaning. First, we are talking about the financial crisis. Number two, I have used the word of bubble. Number three, I used whether disproportionate the value of asset. These are all a term which you need to understand when you talk about economics. And now what I am talking about, the financial crisis in the banking system, which will lead to recession or a depression. Now, again, we are using the word called recession. What do you mean by recession? Recession is nothing but there is a lesser growth or economy become a stagnant. I hope most of you understand the word called gross domestic product, GDP. Hope that you understand. And which is, which is an indicator of any economy is a growing or not. If we are in a recession, means there is a lot of impact on the system. That means that economy is not growing. When economy is not growing, what will happen? There will not be more supply side. If there is no more supply side on the articles and the product, that will be scarcity. Again, the rupee value will come down and the interest rate will go up. And that means that real income of every family or for every individual comes down on the purchasing, in terms of purchasing power of the money. These are all called recession. That means if you are in a recession, you cannot do wealth creation. You cannot have more income. you cannot get, comfortable life. So ultimately the country needs to grow. So you should not fall in recession. The next stage of recession will go into the depression. Depression is a general word. I hope even any one of you understand that. Even sometimes we are in a depressed mood. That means what? I'm not getting encouraged. I feel dull. I feel inactive. I feel that not to work anymore and get discouraged. So these are all a common word called depression. Depression means the country's economy going down and in the minus segment, which again, that create a more problem for the entire country's economy. You understand, friends? So what will happen? The stock market crashes. Once the stock market crashes means what? The price of the share price will fall. As a student of management, you need to watch on a day-to-day basis about the stock market, how the market is behaved, why that behaved. It's all, friends, please don't study just for an examination purposes. Most of us, we want to pass through the exam. We read only to pass the examination. That is to acquire your post-graduation degree. That means you are acquiring the degree, you are not acquiring the knowledge. Of course, passing out of your degree is more essential. I don't deny that. But ultimately, acquiring a knowledge is more important. So then if you want to acquire a knowledge and skill, you have to open up your mind, go beyond your books and classroom, and understand what is happening in the day-to-day economy. So there will be a credit crunch. What do you mean by credit crunch? The bank cannot lend more money. If bank does not lend more money to the corporates or individual or industry, that means that the factory and the manufacturing and service sector cannot expand their activities. If they cannot expand the activities, the productivity will come down. So credit crunch is the very, very crucial for, that bad for the economy. So what will happen? That will make the busting the financial bubbles, which will again put a pressure on the government. Some government, fortunately, so far in India, the government have not defaulted, maybe delayed, for example, refund of income tax or so many things, or a GST, maybe get delayed, but it's not defaulted. So ultimately, what will happen once the market crash, credit crunch happen, the currency crisis will come, the currency will be devalued. If there is a devaluation of currency, that means the value of the currency going down. That means your import will be very high substandard. If import cost becomes high, your balance of payment, balance of payment means what? A country needs to pay to another country for the imports done from the respective country. If it goes on minus side, again, our economy will become weaker. So friends, we need to understand the impact of financial crisis. So ultimately we need to understand that there should be more of financial stability. You understand, friends? So we need to have more financial stability. Now let us understand how the crisis happened. What were the history of the financial crisis? The credit crisis of 1772. After a period, because we need to understand a little bit of history, even though, because we need to learn lesson from that. That is the reason we are always talking about the historical events happening in any of the subject, either in the management or in the finance or in the physics or in the mathematics or in the history or in English or in Tamil. We need to understand a little bit of historical events so that how the evolution of happened, how things have rectified, learning from the mistake and how we have rectified the mistake not to recur again. So there is a 1772, the crisis started in March and April in London. Alexander Fordyce, a partner large bank, lost a huge sum shorting shares of the East India Company and fled to France to avoid repayment. What do you mean by that, friends? Here I am using the word shorting the shares. Okay, what do you mean by that? In the stock market, when you feel that the prices are over or the price is likely to come down, without having a shares in my hand, I can sell it. That means I'm selling short. That means I'm shorting the shares. That means without having shares in my hand, I sell it. My anticipation that the price may fall. In the case price fall, I can buy it again. So there are two-way stock market operations. One is that you buy and sell. That means that you feel that the price of the shares may go up. In that case, you can sell it again after going up. There is another way of doing a business in the market, that if the share price falling, I can sell first and buy next. Okay, what happened? So that the burst happened, he could not meet the requirement, he fled the country. That created a very havoc in those days in the British economy. So the more than 20 large banking houses become a bankrupt. You understand, friends? That means what? A panic led to run on English banks that left more than 20 large banking houses, either a bankrupt or stopping payments to depositors and creditors. What do you mean by that bankrupt? That means my entire net worth has been eroded. My asset value has been eroded. I become a zero asset with a more liability. That means I become a bankrupt. What do you mean by that? I cannot pay anymore my dues because I do not have any asset base to repay my loan. If an individual, imagine if I have a loan of 1 crore, if I don't have an asset base to repay or I have an income to repay, then what will happen? I default to all my lenders. As an individual, if this is the case, imagine if a bank become a default. That means that lakhs of depositors have deposited money in the bank. This bank may not be able to repay the deposit. That means that the people who have already deposited in the bank all have their money is gone. You understand? So what will happen? Banker create lot of havoc because whatever my savings I kept in the bank is gone, means my living is gone. Many of the tired people who deposited the money with the interest what they are earning, they lead their life. If there is no more deposit available, if everything is gone, imagine the life of the people. That is the impact of the crisis. You get my point, friends? So same way, the crash started in 1929, saw a share price collapse after a period of wild speculation and borrowing to buy shares. It led to the Great Depression. 1929, probably if you study the economics, you will understand that what is the Great Depression happened, which was felt worldwide for over a dozen of years. That means that, see, it's not only going downside. You understand, friends, once you go down, again coming back to a normal level, it takes a lot of time. It's not happen in one day. Understand? You lose your money. That means you not only lose your money to bring back to your old economic level, again you have to work hard to earn so much money. So if it is over a dozen, 12 years, if the depression continued, understand how much people would have suffered for their daily food, for their daily working, to maintain their life standard without an income. There is a social impact lasted for longer. So that trigger of the crash was drastic oversupply of the commodity crops, which led to steep declining in the prices. So the wide range of regulations and market managing tools were introduced as a result of the crisis. That is what, as student of management, we need to understand, that when we study the crisis, we also learn why the crisis had happened. So that gives an opportunity to manage the crisis, to find out the tools and solutions, how to manage that crisis if it comes in the future. Same way, there is an oil crisis happened in 1973. The oil production in a 14 country, and they made a problem targeting that backed Israel in the Yom Kippur War. By end of the embargo, a barrel of oil stood at $12, up from $3. Imagine, friends, from $3 of a crude oil price have gone up 12 times, $12. That means almost how many times? How many times the oil price have gone up? No, oil price have got a direct impact on the economy. I do not know how many of you today understand what is a crude oil price. Anyone can tell me what is the crude oil price per barrel today? Yeah, I hope that most of you or all of you have your bike or a car or a two-wheeler, either you or in your house. I'm sure that most of you have a bike. Then you are using a petrol. What is the cost of the petrol? How the petrol comes to this country? Where this petrol have been refined from the crude oil? Unless the crude oil, unless you know the crude oil price, you may not know how the petroleum prices are priced. Either a diesel or a petrol or a gas, LPG, all these things ultimately linked with oil. You know, the oil economy, I hope that most of you understand that Middle East, the Arabian countries dominate the oil prices. When the oil price either goes up or comes down drastically, few months back, the oil prices were in negative territory. That means what? If I have to buy the oil, the seller have to pay me to store the oil because there is no storage because of the shutdown happened in the COVID-19. The entire worldwide economy was shut. No activities, no people were moving, everybody remained at their house. So there is no consumption of diesel or petrol or a gas. The flights are not operating, trains are not operating, car, all transport have been suspended for a few months due to the COVID-19. Imagine, friends, you just understand just lockdown. The lockdown is not a mere small issue. It is the biggest economic issue all over the world. When 2 months, nobody has used petrol or a diesel, what happened to the oil production person? Imagine. So that's how the oil prices came. It became a zero price a few months back. That created an entire, see, if an economy like a Saudi or a Dubai or any Middle East country, they live, the entire economy mainly depends on the oil. If there is no selling of an oil, what will happen to their economy? I hope that you please understand because just bring just in front of your eyes that without an income for the government or the individual or the corporate, how economy will be happening? So oil crisis again, that brought, that Dow Jones is the Dow again, these are all things you need to understand. What is the Dow Jones? It is, an American index like BSE and Sensex, and NSE is following Nifty. There is a Dow Jones which tracks the prices of USA, which almost lost 45% of its value. Imagine a market is crashing 50%. What will happen? See, today I am worth of 100 rupees. I am holding a share. If tomorrow the value of the share comes to 50 rupees, imagine my situation. I become a pauper. I become poorer by 50 rupees. I am not become a richer. My value has come down. Okay. So the Asian crisis again, 97, 98, started in July with the collapse of Thai baht. This is what based on the currency. You know that Thailand, I hope most of you know this country, their currency called baht. And lacking foreign currency, the Thai government was forced to abandon its US dollar peg and let the baht float. That means the free floating the country without regulating. The result was huge devaluation of the spread, much of the East Asia, also hitting Japan, as well as huge rise in debt to GDP ratios. This is the currency crisis happened in Thailand. In 97, 98, the currency like a rupee, their currency have lost its value against the US dollar. So which created a choice in the country. That means for example, you hold 100 rupees in your packet today. Tomorrow, if I say that 100 rupees, you can buy only just an orange mithai or only a chocolate. You can buy or only that parbi. You cannot even buy one plate of idli for 100 rupees. That means you understand the value of your currency. If you have to hold a hotel, you should hold 5,000 rupees minimum daily to have your breakfast. Or 10,000 rupees you have to carry for your lunch. See, that is the situation if it comes a financial currency crisis. That means your value of the currency have been devalued. So it does not have any value so that you cannot do anything. Understand that. These are all the financial crises, okay? And the global financial crisis happened in the stock market, 2007, and which made a Lehman Brothers Bank, one of the largest bank in the USA, become failed. What do you mean by bank is failed? The bank is failed means they are unable to pay interest to the depositors. They are unable to repay the depositors. That means whatever the money they have borrowed from the market, they are unable to repay. That means the bank is failed. So what happened? The government had to come in to bail out the bank so that the credibility, the faith in the banking system by the public should not go away. If like a Lakshmi Vilas Bank happen, 3 or 4 banks happen in the country, then what will happen? The general public will not prefer to deposit their money in the bank, because the money what they have deposited, if I am unable to take it back, why should I deposit money? I lose faith in the financial systems. So friends, what the government and the financial system should be stable is that you should always try to keep a healthy and stable financial system in the economy. Then only the people have more faith in the system. If you loosen the faith, for example, you are all going for examination, your final examination. If examination, there is no strictness, people can copy anything, people can write anything, people get 90%, 99%, 100%. How you have a faith in that system? You will lose. Array, what you do? Whatever I read, I write exam, genuinely I get 40 marks. The fellow does not write anything, gets 99%. I don't value this certificate. I don't respect the system. So any things, there should be what I can say, that confidence, faith in the system, faith in the individual, faith in the family, faith in the nation, faith in the economic system. How that will come? Faith will not come just like that. The faith will come based on your credibility, how strong you are, how stable you are, how healthy you are. That only decide the faith. Faith does not come just like that. You believe me, I always say that. For example, I ask someone, friend, please believe me. How do you believe me? Unless you see my track record, you will not believe me. So that the Lehman Brothers given a long lesson in 2008, because the subprime cases in the USA, which caused a great damage to the worldwide, and that government has moved to safeguard the financial system. Otherwise, the people lose faith in the system. If the people lose faith in the system, the country economy cannot have a healthy growth. You get my point, friends? Okay, these are all the crises happened. Now, how to understand? Because these are all crises happened past. The best things, what you do, what we should do, whatever before coming to that, we should be able to predict, so that we can do a preventive measures. We can take, for example, tomorrow there is a heavy rain is going to come. Then the rain is going to create a hava or a cyclone or a tsunami or a natural disaster. Something is going to happen. If we are able to predict earlier, then what we'll do, we'll try to do some kind of, preventive measures, safeguard measures. And we can almost buy something, keep it 2 or 3 days. There is going to be a strike in the system. So what we do, we keep 2 or 3 days consumption, buy and keep it in the home, so that we don't suffer even 2 or 3 days lockdown. The same way, if there is a more rain, so we can get predicted not going out and keep our house in order, proper drainage facilities, proper water drainage systems. Like that, we will always try to do some kind of preventive measure. Same way, in the financial crisis, we need to understand how the crisis happens. Is it give any signal, or it happens just like that? Friends, I tell you that for anything, it does not happen all on a day. It brews over a period of time. Then it happens. But only thing is, we don't understand, or we don't get the signs and properly. There is a signal, but we don't recognize the signal, or we don't understand the signal. That is the problem. See, normally, when a financial crisis happens, there are 4 warning signs before it happens. What is that? There is a reduced bank capital. In the banking system, this is the first sign of financial crisis we need to understand. What do you mean by that? See, every bank need to have a proper capital adequacy ratio. That means what? You should have a capital. Based on that, you can have so many times of borrowing, and on that basis, your lending operation should be done. These are all basic of banking system. If you lend more without adequate capital, that means that what is that? I can always that you are overstretching yourself, or you do more leveraging your present capacity of capital. Either you should reduce your lending, keep it to the ratio of adequacy, capital adequacy, or you should upgrade your capital. You get my point, friends. You should increase your capital to make up your lending operations. That means that you have lent more. If the system says that there is a lesser capital, but you have lent beyond your capacity, that is the first warning that there is going to be a financial crisis. You understand? That is the first sign. How do you know? You should know that the people who are tracking the economy should be able to track that whether the banking systems are happening properly. You will understand from the balance sheet of the bank and the credit RBI appraisal and the entire Reserve Bank of India can understand that whether the bank's capital is inadequate or it's in reduced mode. The Reserve Bank can very well understand this. The second sign is that soaring a private debt. That means what? The borrowing by the individual and private corporate, so many things have been beyond their capacity. They have borrowed more. The private debt means kadan. You know, the soaring means increasing a private debt is the second sign of the next crisis is going to happen. You understand, friends? There is a ballooning federal deficit. So see, federal, instead of that, you have to make it read as a fiscal deficit. This is, I can say that, that fiscal deficit. What do you mean by that? The fiscal deficit is the government of India. The government have to manage their income and expenditure on a certain level of differences. If the fiscal deficit right now, probably that is the reason I told you, please read the newspaper on a daily basis. And last week when government have announced that their fiscal deficit is beyond, 3 times, than what is estimated for the current year. Because, that 4 months lockdown happened, government had to infuse lot of capital into the system, financial system to revive the economy. That means the government has to borrow more money. The government itself borrowing to meet its requirement, anticipating that economy will grow, thereby the tax collection will improve. The tax collection again will reduce our fiscal deficit. So this is the third warning that anyone should get, that because all these things I am telling you, friend, at present it is happening. That again, the interest rate. The interest rate is the clear indication that whether if your interest rate goes up on your lending, on your borrowing, that means your economy is not in a healthy state. I tell you, friends, all this, rather than the interest rate, all these things are happening in today's economy. You can note down now as a student of management, please note down. And we expect, that there will be the crisis. If the same situation continues, if you do not take a preventive measures, or if you do not able to manage the crisis, this will bustle out. The last March, the Sensex has come down to 27,000 points. Today it is a 49,000 point. That means that over a period of 6 months, the Sensex have been appreciated almost equal value. Is it the value have been, the wealth have been created so much? Is the economy have grown so much? Why that share prices are going up? That is again a big question mark that which need to be cautious. That is the reason yesterday Reserve Bank of India governor have warned the market that the market have been disconnected from the real economy. That means that these are all the signs of warning has already brewing. That is what we need to learn, friends. So we need to understand what are the recent crises that, COVID-19, one of the worst crises ever the world have faced. The impact, 3 months lockdown, partial opening up, still, most of the areas still, for example, you and I are sitting in a different places taking a classes. That is the impact of this crisis. We are not meeting in our classroom, which will be more lively, which we can interact. Once we see each other, there will be a better interaction than taking online classes. Still it has not become a normal. College life has not become a normal. School life has not become a normal. Theater life, mall, everything still, some of them are locked down. Crisis, airport, railway station, still all the trains are not running. So the COVID-19 is one of the worst crises And I hope that you all have to study and go back on, sit on your various data to understand how COVID-19 have affected each one's life, either individual or an institution or in the nation's economy. Please do your practical work so that you will understand better than studying the theory. So the next major crisis happened is that Yes Bank. Please read the balance sheet of Yes Bank. Please read, go to the Yes Bank website and read what happened. 40,000 crore, the minus net worth happened. The entire capital, that is what my earlier slide I showed, the reduced bank capital. That is the sign of Yes Bank. The capital have been eroded because more bad debts, more NPA, the capital have been eroded. How bank will run without capital? It become a bankrupt. So government have to induce the money into the system, revive the banking. What happened in the case of Lakshmi Vilas Bank? Lakshmi Vilas Bank have been merged with the DBS Bank. It has been merged without any condition, without any value, zero value. It has been merged. What do you mean by that? The shareholders of the Lakshmi Vilas Bank all have been evaporated. If you are holding a shares, if you are invested in the Lakshmi Vilas Bank shares, it becomes zero. Your value of shares has become, that means the entire capital have been wiped out. This is the biggest financial crisis we have seen in front of us 3 months back. Today, no more Lakshmi Vilas Bank, 98-year-old bank. It is no more. The money people have invested as a shareholder, not as a depositors, all gone. Those people who have invested in Lakshmi Vilas Bank as a Tier 2 bond have been zeroed. That means all written off. We are not, the bank is not ready to pay to them. Imagine how many people lost their wealth in the crisis. You understand, friends? Same way you see the ILFS, one of the leading non-banking financial institutions, which controls investment banking, merchant banking, share market, so many mutual funds, so many things become a problematic, led for a crisis. All these things, the crisis warning have happened. And the same way with DHFL. DHFL is another housing financial institution, which became a problematic last 1 year. People have lots of money in the system. And these are all happening in the last 1 year. We need to study that. We need to prepare. If anyone is interested to do a project report in your post-graduation, please do that. Study this bank, DHFL, ILFS, LVB, Yes Bank, so that you can understand better what happened in the financial systems, how this kind of a 98-year-old bank have failed and closed its operation, have been merged honorably with another bank. Imagine situations. So that what went wrong with the LVB, just I give you a case study that the LVB shifted from SMG, it provided loan to 794 crore to former promoter of pharma company called Ranbaxy and Fortis Healthcare. 794 crore they have given loan to a company of Ranbaxy and Fortis. The promoters called Malvinder Singh and Shivendra Singh against a fixed deposit of 794 crores. Just see that you need to understand how the bank is taking a 794 crore deposit from the promoter and given a loan 794 crores, to the promoters. What happened? The tricky side happened. The 2018, that the Religare Investment, an arm of Religare Enterprise Limited, and sued a Delhi branch of LVB to redeem a fixed deposit worth about 800 crores. See, this is the trouble arose. How another financial service company have sued the LVB branch and claimed that 800 crores to recover from Singh brothers. It happened. So once 800 crore have been, their guarantee of the deposit have gone away from the LVB bank, the entire 794 crore become a bad debts for this bank. You understand? Bad debts means what? The promoter could not repay this because there is nothing is backed by that. Any loan should have a proper security and a margin system. Without a margin, without a deposit, if a bank lend money, what is the guarantee that the loan borrower will repay their loan? You get my point, friends? So it became a problematic, which are all led to the NPA in the system, and prompt to corrective action was being taken. Finally, nothing could be done. Nobody could save that. The same happened, sudden collapse of ILFS. Again, you know that disastrous in 2016, and see the 86% of the currency circulation, because especially you know the demonetization and GST have brought into lot of impact in the systems. How sudden collapse happened in ILFS in the September. Same way, and you know that it's for the reasons, you know, let us understand how this has been happening. See, this self-copying, the reliance on a short-term funding to purchase financially engineered asset. What do you mean by that? Buy a short-term money with your long-term assets. You get my point. For example, I borrow 1 crore rupees from you and telling that I will repay in 1 month time. This is a short-term loan I am borrowing from you. With this 1 crore, I bought a land, I buy a land in somewhere else, and which cannot be sold just like that, because I take a short-term capital, invest in a long-term assets. That means I may not be able to generate back to repay my loan. So in that case, you know, I am unable to manage my risk management system, which become a financial disaster. So always, friends, we need to think that you have a short-term capital to meet a short-term requirement, long-term capital to meet a long-term requirement. If you do a mismatching between short-term funds and the long-term funds, you know, then you will get into trouble. The another problem is that we do not have the deposit insurance. Of course, this partially started introducing because we learned the lesson from many crises, though government have insured up to 5 lakh rupees of the deposit. For example, suppose if the bank fails, I have a 20 lakhs rupees deposit in LBB or any bank. My insurance takes care only for 5 lakhs rupees. The balance I will not get back. You get my point, friends. So there is a, you know, that I am not covered fully. I am partly covered. My risk has been partly covered. My risk is not fully covered. You understand, friends? So what do you mean by the risk? Risk is either life. Even I warn all of you that I hope that every one of you should have a bike, and please check your insurance. Is it a third-party insurance or it is a comprehensive insurance? After the class is over, please go back and take your insurance paper and read that, study that, whether it is a comprehensive insurance or just a third-party cover. If it is a comprehensive insurance, that means your risk has been fully covered. What do you mean by that? Either damage to your vehicle, or damage to you, or damage to life, or causing danger to third party. All these things are covered if it is a comprehensive insurance policy. Suppose you would have done, due to save the premium, you would have done third party insurance. That means what? See, any cause happened, damage happened to a third party while in the accident, only that much only covered. You cannot claim the damage to your vehicle. You cannot have self-damage, your hospitalization, anything you cannot claim. You get my point. Many of us does not understand the proper vehicle insurance or life insurance. In our country, people are serious about the insurance because we don't understand the risk involved in that. So wherever there is a risk, the risk need to be covered. The risk, how it covered, the risk hedging product is an insurance. So when you do the deposit insurance partly, that means you are not fully covered. So this is how the most of the thing. Then what happened? There is a affordable housing, weak underwriting standards, and resultant increased house prices and construction, excessive reliance on credit rating, and innovation in the financial market such as securitizations. So there is various reasons which leads for the financial crisis. Unless we understand the reasons, unless we take a remedial measures, then we cannot, it's going to happen every now and then. If today one bank will fail, tomorrow another bank will fail, tomorrow another institution will fail, unless you take a proper promptive actions. You get my point, friends? So friends, how the crisis have been managed, because there has been regulatory measures. What the government is doing, see, the Reserve, for example, entire banking system has been regulated by the Reserve Bank of India. It is a job of the Reserve Bank of India to understand the early signals of the weakness in the financial systems. Is there any sign of bubbling? Is there any sign of crisis? And they have to take a promptive actions in the money market or in the banking market. The same way Securities and Exchange Board of India is regulating the Indian capital market, which need to understand the corrective measures and all promptive measures, the margin system, well-regulated grading surveillance of the happening in the market, and take a promptive action will only bring down the crisis. Even though 100% we cannot eliminate the crisis, we can very well manage the crisis. You understand, friends? So that the regulators, the central bank, and same way IRDAI, the insurance regulatory authorities. So we have too many regulatory authorities. How, see, for example, simplest way, how the road accidents are happening. If the traffic police regulate the system properly, if the traffickers follow the traffic rules properly, then why there should be an accident? Most of us, we don't respect the signals. If there is a rate, that we jump the bike, we'll go. We feel proud that when you violate the rules. I have seen that many youth, when there is a red signal on the road, they just fly the bike like anything and just run, and they feel proud. They look at the backs, they see how I have crossed. You still people are waiting behind. In our country, not only in many parts of the country, that when we violate the systems, you are heading for a trouble. So we need to see, for example, within the college, in the classroom, in the education system, we have certain rules and regulations. We should obey the rules and regulations to make the campus better, make the educational institution better, make our own life better. But we don't like the regulations. We don't like the rules. We want to violate the rules. Whenever we do violations of any systems and rules, you are likely to get problem. If not today, at least tomorrow or day after tomorrow. That is a sure. That is what the history teaches. Why I have been telling the history about the subprime cases, Lehman Brothers. If you would have warned, Lehman Brothers, based on the Lehman Brothers happened in 2008, it would have happened after 12 years, why Lakshmi Vilas should get failed? Why Yes Bank should get failed? If you would have taken a promptive actions, corrective actions. There is enough lessons, but we learn the lessons, but we don't act on the lessons. That is what the system's happening. So friends, the financial crisis happens, why this happens, how it happens, how it impacting the economy, and what is the earlier signals in the financial crisis, and what lessons we need to learn, how promptive actions and manage the crisis. This is what we have been looking at it. And with this, I'll conclude, and I will open the session for a discussion, so that I like to have more question and answer so that we can do better understanding on the subject. And I think time is also over. Friends, I really thank you for your passion sharing for an hour. And please let me open the floor for a discussion. I invite a lot of question and answer. Thank you so much, friends.
So any questions, you can, students, you can post it, or you can just unmute and talk. And
yeah, unmute your mic, ask anything, don't hesitate. These are all, this is how you can learn to discuss. And, don't hesitate whether your question is relevant or irrelevant or is sense or not. Try to open up, always try to discuss more in the classroom so that you will understand better.
what personally I have gained from this session was a lot, sir, actually. Credit risk models, I was always having that mindset, the stuck mindset, share market is always risky one. But I see if you assess it with proper regulatory form and move forward, we will be able to be successful. But we have to keep watching, the while vigilance is more important here. That is what I understood here. And
Yes.
the lessons from the real live case studies from Lakshmi Vilas Bank, ILFS and DHFL, those things are things which puts us the real learning. So how vigilant we got to be in the market, even those people with 98 years of survival, they were unable to stand in the market. They got to go with zero capital out. That's a real suffering thing. We have just seen in front of our eyes the last within like 2-3 months time, not even years, like two banks suffering, like your S Bank and Lakshmi Vilas Bank, right, sir? So that's really an eye-opening, and we will take it as case studies, and we will try to do something out from the classrooms, as they're all first years, and they're trying to. I'm very sure a lot of new vocabularies they would have captured from your session today, and many are new to them as after their UG undergraduation. So it's a great session, sir, for not only for the students, for us, especially the faculty, and especially to me, I have learned a lot. So any questions, students?
You keep some mark for the students, say how many questions they ask, accordingly you give some internal marks.
Yes, sir. Obviously we have that since their first semester.
Yeah, please,
and
please.
the bonding is not done yet, because we are all in virtual platforms, right?
Yeah, true.
So we are trying to develop that bonding.
Yes,
that's a thing. There are plus, there are minus into this.
Yeah, true.
So this is Sriram from Chennai.
Okay.
Is it that participant can raise question?
Yeah, please.
Can.
Yeah, thanks. So it's an eye-opening session. I'm in a financial profession and ex-student of Sundar sir. A great learning from this session. Actually, thanks for opportunity, Sundar sir, to bring in to be part of this session. Actually, thanks, Annamalai sir.
Thank you, sir.
Yeah. So you are not an external member, Sriram. You are my student still, right?
Yeah.
You are my alumni.
Yeah, absolutely.
You don't need to separate from us. Always.
I'll be part of Sundar sir's family. So my query will be, as you said, that there is a negative relationship between the real economy as well as on the stock market, where the prices are shooting. According to the Buffett's ratio of market cap to GDP, now we are standing at 104 to 105% of market cap to GDP. Correct me please if I am wrong anyway, sir. And we might have a healthy correction which has to be done over in the next few days or a few quarters, as we've seen that the earnings are not that much great in every sector, except some few sectors like IT and pharma.
Yeah, please carry on.
So what kind of future outlook that we have been providing in the market?
So there are two things today, and as the RBI governor have put it, there has been disconnect between the market and the real economy. That's number one. We need to accept that. But still, why this disconnect happened? And no, there is a large inflow of foreign amount into the system, into the capital market. That is there are, the market grows, the price of the shares goes up on two accounts. One is that the fundamentals of going up, so that the wealthy creation is happening, thereby the share price of each company goes up. That is a fundamental factors. There is another factor called as the liquidity driven. See, basically, as I told you in any economics, the supply and demand factor. When the large amount, last 1.5 to 2 months, 1,20,000 crore have been pumped in by the foreign institutional investor into the market, Indian market. Probably their logic may be different, because worldwide, next to China, probably India is the growing country. But compared to China, India is more democratic, more transparent, more healthy. And so people allocate the international funds a lot into the Indian market. So that when there is a large funds chasing up the shares, the prices are going up. But last 1 month, probably from the COVID-19, from April, when the market fell sharply, it is looking up every day, looking up. And there was no correction was happening, because every day the buying was happening 2,000, 3,000 crore by the FIA. This is what the fact happened. But is it supported by the fundamentals? No, it's not supported by the fundamentals, because, and main reason, especially on the financial sector. See, the Supreme Court has stayed the treatment of NPA by the bank. If the interest is not paid by the borrowers for a consecutive 3 months, normally it will be treated as an NPA in the system. But since Supreme Court have stayed because of COVID-19 till March 21, if there is a non-repayment of loan or non-repayment of interest should not be treated as NPA, that gives a cushioning for the bank, or a cushioning, or whatever you call it, that is not the real NPA, has not been reflected in the books of the banks. We do not know what is that X amount. That is reason the governor has indicated more NPA will be shown in September. That means that March, then again there is a 3 months April, then June, July, August balance sheet will reflect the real NPA in the system. So there is the hiding factor is happening. We do not know the real health of the bank for the last few months, but still the FIAs have been investing, because for them, even 3%, 6% return on their investment, they will be more happy, because there is a zero return of income in their country. For them, even if the bubble happened tomorrow, the bubble burst, still they will not get affected, because they have already made almost their money with a 6% return. Whereas, for us, when 6% rate of fixed deposit interest, when we don't get even 6% in the stock market, we are the losers. So the enough indications are there in the economic system that there is no growth. We are in a minus GDP of 7.5%. And there is no real reflection of NPA in the banking system. Even the few growth happening like Ashok Leyland, Tata Motor, or Steel, or all the growth, what happening is that because there was a shutdown, suddenly when the economy opened, there is a huge demand happening. That kind of demand, whether will sustain over a period of time, that is again a question mark. So with this factor, we are doubtful that when it will happen, we are not sure, because nobody can predict market exactly, but there is an expectation that market may fall. And when, that is a big question mark, very difficult to predict.
Thank you, sir. Thank you, sir. That's all from my side.
Yeah, so I think, is there any other questions? Otherwise, we would like to register our gratitude, sincere gratitude to you, sir, Annamalai sir, for your time and the time and the presence here, gracing this occasion, sharing your provoking session on the credit risk models, lessons learned from the financial crisis, especially from the latest ones, which was really a great occasion for us. And thank you so much, sir. And we thank the team of Annamalai Capitals as well, Mr. Suresh and all our the other members who coordinate this event. Also, thanks to the faculty team and our alumni and our student friends. Thank you so much, all of you. We'll meet up again in another occasion. Thank you. Thanks a lot. Thank you, sir.